Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader on XAUUSD. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is the 4-hour chart of DXY, US dollar currency index, and heavy correction is still going on. We can see that the EXY also witnessed heavy fall during the last trading session and settled at 106.41. So yes, Monday opening will be very important for DXY just to see whether the correction continues or DXY tries to recover after the market opening. As you can see that I have clearly mentioned on the chart, next resistance, if DXY tries to recover on Monday, then the next resistance will be around 107.70, 108 level. It means the previous resistance, the previous support, this was the previous support zone. So if DXY tries to recover, then this level will act as the next resistance for DXY, and in case the selling pressure continues, then obviously we will see further downside and the next support will be around 105 level. Let me take you to the daily chart. See, this is the daily chart. Let me remove the drawings and see, this is the condition of the DXY on the daily chart. As you can see that previously 50 moving average was providing support to the market. So right now all hopes are on the red line, the 200 moving average, because the 50 moving average is gone. And if I take help of the Fibonacci retracement level, then you can see that around 105 level, around 105 level we have Fibonacci 38.2% retracement level, and around 105 only we have also seen previously price being rejected from below, and we also have the 200 moving average. So previous price rejection, previous price rejection, then we have Fibonacci, then we have 200 average. So if we combine three factors here, then this makes it a very strong support for DXY. So in case DXY falls further, then yes, this can be a good support. But right now, the trend of the market is towards the downside. So plan your trades accordingly. Okay, now let's have a look at the chart of gold. This is the 1-hour chart of gold in front of us, and gold closed at 1771. And if you have watched my previous video, then hopefully you made good money, because I have received many messages and emails. Really, it was overwhelming. Okay, I'm also happy, or I feel very happy when you guys make money. So my dear friends, if you like my work, if you really like my analysis, then you can consider joining the Pro Trader program, which is a revolution in the field of learning, because this is the most affordable program for all the traders who wants to take up trading as a serious source of income or a profession. You can see that I have mentioned everything in detail, where you can also learn, trade and earn. So I have mentioned everything on our website. If you really want to learn from me, if you really love my work, then you can consider joining the Pro Trader program. The link is in the description. Now let's have a look at the chart of gold. So what to do then? As already I have mentioned in my previous video, that 1800 is the next target. 1800 is the next target for gold. Swing traders, positional traders, this is your target. This is your target. So you should look for buy at dip. Okay, so positional traders, swing traders, your strategy is simple right now: buy at dip. Okay, because right now correction is going on in DXY and gold is extremely bullish right now, and we have already discussed about the structure and all, so I do not want to repeat the same stuff here. So as I just said, the buy at dip should be our strategy as of now. So we need proper support in the market. So yes, the previous support level that I discussed yesterday is 1735 is still very much valid. In case gold witnesses heavy fall, listen to me carefully, in case gold witnesses good amount of fall on Monday, you can expect the market to take support around 1730 to 1735. Let me write it down. 1730 to 1735, the best support. Why the best support? Because this was the previous resistance for the market, which will now be acting as the what? Support for the market. Resistance becomes support and support becomes resistances in the market. But this is the ultimate support. You can see that this level is quite far away, quite far away. So before that we can also see we have 50 moving average as dynamic support on the 1 hour chart. Okay, you can also check the same stuff. You can see whenever market is coming down for some retracement, for some pullback, you can see it is getting the required the best support, the required support from the 50 moving average. So in case market shows some correction, we can definitely expect that the 50 moving average will provide a required support to the market again. So these two are very good support for the market. But as we all know, volatility plays a big role in the market. Volatility decides whether market will bounce from a particular level or not. After all, not all levels are permanent in the market. And as I always say, do not gamble with hard-earned money. Protection of your capital should be your first priority as a retail trader. So if the market witnesses heavy volatility or shows extreme volatile market situation, then we can expect the market to take support around these two levels. But if the market remains slow, because usually Monday mornings are dull, Monday mornings are slow. So if market remains dull and slow, okay, then you can expect the market to take support around 1756 and 1746. These two are also support for the market. Okay, I'm just changing the color. Okay, these two are also support for the market if the market remains low volatile. Okay, so if you see the market is slow, but if market is coming down, then definitely you will see market taking support and bouncing. But keep in mind, under extreme volatile situation, these two levels will not work. One thing you must understand, that not all levels are of equal strength. So these two are minor support for the market. So if market comes down and if you see the market is the volatility of the market is like this, okay, then you can definitely expect the market to bounce from 1756 and 1746 level. But do not place a blind order. Okay, once market will hit the support level, observe the market first. If you see that market is trying to take support, market is forming a hammer pattern or anything like that, or showing any good price rejection from below, you will get the confirmation that okay, market is taking support and you can consider taking a buy position. Okay, again I'll say, positional traders, swing traders, you should look for buy and dip. Okay, and retail traders who especially are in love with day trading or intraday trading, okay, you can look for 40 to 50 pips easily. So whatever I have discussed today, this is for Monday only. Please do not shower the comment section with things like you don't know anything, market will reverse from there, market. Okay, see, this is for Monday. Okay, you can read in the title as well. Okay, so whatever you do, please follow proper risk management. See, no trader is 100% accurate. Okay, so follow proper risk management. Please calculate a position according to the stop loss and the capital size. Okay, bye bye, take care, and do not gamble. Bye bye.